The majority of people believe that in order to be wealthy, you must first have money. Well, that is not absolutely accurate. To make money, you must first have great ideas that solve problems. You will attract money like a magnet if you do. Rich people believe in borrowing money from others to fund a great idea. But did you know that you only need a few skills to enjoy life and boost your finances? We'll get into it and show you some money skills that everyone should know. Hi everyone, welcome back to the Life of Luxury. Savor the flavor of exploring wealth, where we post videos about life and luxury. Join us on an exciting video as we explore the wonderful lives of the elite. We are absolutely thrilled to share our knowledge with you. If you are new here, please subscribe and hit the notification bell so that we can continue to post videos on this channel. And don't forget to leave a comment and we'll make sure to engage and start some interesting discussions with you. Here are 15 money skills that everyone should know. Number 1. The skills of saving money. Although no one became wealthy by saving money, moving up the wealth ladder will not happen unless you have millions of dollars saved. What you do with it determines whether or not you turn it into wealth. Now, saving money is concerned with cash, and cash is only useful for two things. For starters, it serves as a safety net during a financial crisis. Second, the value of cash allows you to take advantage of opportunities. If a good investment property or business opportunity arises, the value of your savings increases. Number 2, the ability to distinguish between savings and liabilities. Remember that wealth isn't always defined by how many jewels you own or the type of car you drive. Wealth refers to the possession of valuable financial assets or physical possessions that can be converted into a form usable for transactions. However, this does not imply that when you convert your savings or assets into cash, you have already achieved wealth. For example, just because you were able to sell your car for cash does not mean you already had an asset. It is in fact a liability. Remember that cars have expenses such as maintenance, insurance, fuel, and depreciation. So instead of accumulating wealth, you are simply spending your savings to pay for it. However, an interest-bearing investment is a wealth-creating asset because it grows in value over time. Remember that savings are what remains after paying your expenses, whereas liabilities are things that you owe on or cost you money. To calculate your wealth, subtract your liabilities from your savings and assets. Number 3, make tax work for you. Taxes are feared by low-income earners, but they are adorned by the wealthy. Why? Because they take advantage of it. To master money, you must learn how to use taxes to your advantage. There are usually tax advantages to investing for retirement, whereas you may pay more taxes if you simply save your money in a current account or in a trust. You can invest your tax savings and use them to save for even more taxes. Number 4, improve your resourcefulness. Most people are often reluctant to take out loans and accumulate debt, right? They only ever spend their own money. However, you ought to improve your resourcefulness. For instance, suppose you operate a service that needs equipment and wish to enhance it. Maybe you'll believe it's just another expense, but that isn't always the case. You can deliver the service more quickly and increase your clients by double. Of course, you must be certain that the inflation won't become unmanageable and that you have adequate revenue to pay the loan whether or not your business projection turns out to be right. If the improved property helps you double your sales while providing faster service, the loan repayment is manageable. If you are interested in knowing the secrets to building wealth from nothing, you can check out more videos about it on our channel. Also, don't forget to hit the like button to help us know what video references you like in the coming videos. Now, let's get back to the video. Number 5. You must learn to earn more while spending less. Cutting back rarely solves the problem of not having enough money. It is true that spending beyond your means is never a good idea. So having more money is the best option. You can change jobs, start a side business, or increase the productivity of your company. Remember that the world is ubiquitous, and you only need to tap into it to bring in more money. Number 6. Understand the basis points. Basis points are actually a very simple concept. Each basis point is equal to 1% divided by 100. In short, it is 0.01%. So why are we discussing this now? We must learn basis points because they are most commonly used when discussing interest rates. As a result, they are used to ensure that even minor changes are recorded, because a quarter of a percentage point can mean millions when dealing with billions of dollars. So, a 50 basis point increase or decrease only means that interest rates have risen or fallen by half a percentage point. Number 7. Understand your financial requirements. You should begin calculating how much money you actually require. This will ensure that you grow your wealth wisely, rather than simply spending it more. Most banking apps now use pie charts to help users see where their money goes. They can compare a real dollar and cents value per category. If you are already aware of this, you will be able to calculate how much time that you have left to build your wealth. Number 8. Make retirement plans. Most countries provide some form of labor force retirement benefit. However, if you investigate private retirement fund options, you will discover that there are numerous tax advantages to investing in a retirement fund because most governments reward you for looking after your retirement. Number 9. Protect your money. For centuries, people have desired to secure their wealth. They even diversified their holdings by purchasing gold, art, real estate, and other assets. But there is a threat here, and that is theft or damage if not properly stored, and the risk of having everything in one place, or if your country experiences inflation. You should understand how to protect your money by not putting all of your eggs in one basket. You can invest in cryptocurrency, which is a tool used to protect money, by diversifying your investment portfolio between savings, investments, real estate, and business. You can lower your risk while increasing your wealth. Number 10. Make money with ease. Money can even work for you while you sleep. Simply place it in the appropriate location, particularly in an interest-bearing account. Number 11. Apply the monthly income 50-30-20 rule. According to career politician Elizabeth Warren, you should divide your finances into 3 categories. Spend 50% of your income on necessities, 30% on desires, and 20% on investments. Number 12. Add your value. To create a sustainable income, consider how you can add value to your boss, clients, or customers. People are willing to pay you more when you add undeniable and unique value. Naturally, this does not mean you will not suffer financial losses, but it is a far better way to accumulate wealth. Number 13. Understand what to look for in the terms and conditions. The banking fees. Banking fees are unavoidable, but there are ways to pay less. Some banks offer a no-fee bonus if you keep your account above a certain amount. So keep an eye out for this and keep it up. If you pay a fee per transaction, upgrading to the next type of account may be worth the monthly fee because it allows you to make unlimited transactions for free. Number 14. Understand what to look for in the terms and conditions in credit cards. Many credit cards offer interest-free credit for 30 days. You won't have to pay anything for the free transactions as long as you return the card to zero every 30 days. In addition, some credit cards provide free insurance if you purchase specific items with them. So make use of these benefits and turn your credit card into a savings tool rather than an expense. Number 15. Understand what to look for in the terms and conditions in investment fees. The expense ratio is the primary cost of an investment. This is the money that the investors charge to manage the fund. It is calculated as a percentage of each dollar invested. For example, if you invest $1,000 at a 30 basis point expense ratio, you will definitely pay 0.3% on $1,000, making it $3. This may sound strange at first, but consider how it will affect you in the long run. Okay, so what money skills mentioned in this video have you used successfully? We look forward to hearing from you in the comment section. Now, we understand that you will be waiting for your bonus during this time. So here you go. Do you want to know how anyone can make their children millionaires? That is the crux of life insurance. Even if you lack the financial resources to accumulate $1 million in your lifetime, you can still protect your life. Of course, none of this is possible unless you manage your time wisely and effectively. Do not put in too many hours. Learn to enjoy and relax because that is the actual worth and fruitfulness in life. That's it for now. If you enjoyed the video and found it useful, remember to subscribe to The Life of Luxury for more videos to help you explore the wonderful lives of the elite. Make sure you hit the notification bell so that you won't miss out on any of our uploads. See you in our next video!